All right. Good morning, ladies and gentlemen. Welcome to another edition of MACROACE, going through the Bank of Canada rate prep. Tomorrow we have the ECB interest rate decision, which is going to cover a lot more ground before it. Bank of Canada expected to keep their rates unchanged today, with also expected their monetary policy report on top of their rate statement as well. So there's the reasons as to why they either they stick with their decision, and then the monetary policy report goes through where they see the economy and so on, and what the economy has experienced so far. So there is the added bit of risk in regards to what else to expect from the Bank of Canada, but all relatively simple to understand what to kind of expect. Okay, so let's go through it then. So how does it affect the markets? Very simple with the currency. If the central bank raises their rates and it is above market expectations, then the currency usually appreciates, because then that makes the currency more valuable. You have international investors that will put their money into a currency that will then provide them a higher rate of return as well. And then you also have traders and speculators that will make bets on where the central bank might go in the future, whether they're going to continue hiking or whether or not it's the final hike, and so on. With the stock market, usually takes a hit if you do get a higher than expected rate, because if it's priced, let's say a certain rate is priced in, but then it goes above that expectation, then that would cause a surprise to the markets. And usually when rates are raised, that leads to stock markets taking a hit, because those businesses would their borrowing costs would increase, and also for consumers too, which will then affect the buying, the amount of buying that those consumers do of those goods and services from those businesses. For the bond market, same as currency in this situation, if rates are raised, then bond yields go higher and bond prices go lower. So this is all quite simple to understand, just something to keep in the back of your mind when we're comparing in this cycle. Although we have paused for quite a while now, doesn't mean that there can't be surprise in the markets. Maybe they are open, they open up to a rate hike early this year, maybe in the first half, or maybe they don't. So with interest rate decisions, as I said, there are other risks that are present. Not only do you have the rate decision itself, but you also have the rate statement that accompanies the interest rate. Whatever's said in that rate statement will then be digested by traders, and traders will then make their own decision as to where they see or what they think the Bank of Canada or any central bank is going to do. Not only what they've done, what they've said, but also what they could do in the future as well. So when we're looking at this rate statement, we're looking for hawkish and dovish comments. How similar is the new rate statement to the previous rate statement? Or is there a big divergence? And when I talk about divergence, is the statement more hawkish, which will then provide a bullish momentum to the currency, or is it more dovish, which will then provide a more bearish momentum to the currency? So where is the economy at the moment? So CPI with year on year was at 3.4% compared to 3.1%. CPI trim, or the core CPI as others refer to it, was at 3.7% compared to 3.5%. GDP quarter-on-quarter annualized rate was at minus 1.1% compared to Q2's of minus 0.2%. And employment change came in at a measly 100 at a measly 0.1k versus 24.9k. Average hourly earnings at 5.7% compared to 5%. Unemployment rate remained unchanged at 5.8%. Retail sales was weaker at minus 0.2% compared to 0.1%. PPI year on year at minus 2.7% compared to minus 2.3%. And RMPI month on month was at minus 4.9% compared to minus 4.2%. And manufacturing at 45.4% compared to 47.7%. So overall, the key figures that we need to be looking at from this list are going to be wage price pressures with average hourly earnings, and then the consumer price inflation reads. Because although the central bank does focus on how strong is growth and how strong is the employment or the labor market, there is still the overhanging issue of inflation remaining sticky and taking longer to reach the Bank of Canada's 2% inflation goal. So if inflation does see in the future another tick up, then it would push out the case for a rate hike early in the first half of the year, and that could push that out to maybe the later end of the first half, or even in the second half instead, depending on how the central bank sees the data and what they will then decide to do. So just purely looking off of this, if you're guessing as to what the central bank could say in their rate statement, taking into account, what they would do is probably take into account that inflation is still sticky, and that there is still a need to keep rates at the restrictive level at where they are. And a very hawkish statement would be if they feel that there is a need to keep rates at this level for longer than what they might be anticipating, or they might be expecting, and also what markets might be expecting too. Okay, the previous Bank of Canada rate decision then, December 6th, so they said that they're still concerned about the risks to inflation. Statement dropped October language about inflationary risks increasing. Higher rates are clearly restraining spending, and labour market continues to ease. Even though job vacancies have declined further and jobless rate has risen modestly, wages are still rising by 4 to 5% on an annual basis. And then the meeting minutes from November, should be for later. The council expressed concerns that shelter price inflation could remain elevated, which could make it more difficult to return inflation to 2%. Minutes did not repeat language around the October 26th announcement about some governors seeing the likely need for higher rates. Council also agreed that risks to inflation outlook remained, and it might still be necessary to increase the policy rate. Then Bank of Canada views, so he had from Governor Macklem, said that he sees the Bank of Canada cutting the overnight rate in 2024, but no specifics were given as to whether that would be in the first half or in the second half of the year. Then Deputy Governor Gravel said that it's still pretty clear that we're not on a sustainable path to 2% inflation, to the 2% inflation target, and the market has been relatively right on our previous two or three decisions, and it seems like they're taking in data the same way we are. So sentiment of views, just going back to the comments then from Macklem and Gravel, to be honest, they don't really say a lot that traders haven't seen already. So it's a bit hard to sometimes find new comments, and that goes the same. That goes, the same for other central bank speakers too. But with the Bank of Canada, there's less communication that's provided through to the market by the central bank, which, albeit doesn't make it, although it's not as important as what the Federal Reserve does, but as a trader and with price expectations or betting on what the central bank might do, then it makes it a bit more difficult, and then adds risk to your trading when you do get the interest rate decision that comes out paired with the monetary policy statement. So there is the element of surprise there, and they have surprised the markets in the past before within their rate hiking cycle, whether that be in their rate decision or what they've said in regards to monetary policy. Then looking at sentiment and views, we have RBC that said there's a 70% probability that a quantitative tightening ends before April 1st. And January 6th post CPI data. So what happened to the markets on that day? So you had Canadian stocks that ended 0.5% lower as stronger than expected core inflation led traders to adjust their tune on an early Bank of Canada rate cut this year. And on top of that, you have economists that see a series of rate cuts beginning in the second quarter. And then Citi, they say that leading indicators of core inflation, like the CFIB surveys, business price plans, suggest further easing in core inflation will likely be very gradual. But they continue to pencil in the first rate cut in July, and see markets pricing in the first cut by April as overly optimistic. And that kind of makes sense with how the data has played out, with inflation still being a bit sticky at jumping to a 3.4% from 3.1% previously. So either the central bank, if they do get the next time round, if they do get an inflation read that is much lower than what was expected, and also compared to the previous figure, if the economists are expecting it to tick up again, then that could help the case for a rate cut in the first half of the year. But other than that, if you do get inflation that still remains sticky around the 3% mark, then the likelihood of a rate cut happening in the first half does get pushed out further, and then you go into Citi's scenario of potentially looking at July for the central bank's first rate cut. And as I said, that's penciled in. So again, everyone's data dependent, as we should all be, with what the central bank is doing. It could flip on a dime, but we're not sure yet until we've seen other bits of data that kind of confirms what the central bank might do. So this is the previous release then from what we had seen last time around. If I kind of go forward a little bit. Okay, so this is about 4 seconds before the release had come out back on December 6th. So the rate remained unchanged as expected. You can see the market reaction was quite muted from what we had seen there, and there wasn't, and that goes for the previous report or the previous rate decision before that in October. So there weren't any surprises that were provided by the Bank of Canada. The only thing that the Bank of Canada had said is that they're still concerned about risks to inflation. Statement dropped October language about inflation risks increasing. But as I said, there was nothing else that the Bank of Canada said that was a surprise, hence the muted reaction. So that was the last rate decision. So if I kind of creep forward and... let's keep going. So this is the last trade that I had, or the first trade that I had on the CAD JPY off the back of that data. Now, usually the biggest market reaction usually comes from GBP CAD off of the back of the data. But in this case, I was just keeping an eye on using a TICKSTRIKE for the trade there, and just managing the risk that way. So if I kind of skip forward, let's kind of see where we got to with the rest of the market. So yeah, so you can see that it wasn't that great, to be honest with you. Although a trade was made, the strength of that initial move wasn't that great. So it was more of a in and out trade that I'd taken there. This time around, again, we'll have to wait for more of a hawkish statement from the central bank itself, as you did see some strengthening from the Canadian dollar off of the back of the central bank still being concerned over the risks to inflation. Hence, the trade was taken in that part there. But other than that, there wasn't really anything else that time round. Okay, so let's get out of this here. All right. And let's have a look at the deviations then in a bit more detail and see what had caused the biggest market move, or what had seen the biggest market move in the space. So, okay. So here we go. This is how the markets had reacted last time around. You see that the biggest market reaction was from GBP CAD. And GBP CAD has had a consistent, or has seen a consistently large move compared to other currency pairs in the past. So GBP CAD this time round, you did see initial 13.5 pip. So this first figure here shows you the initial market reaction going to the wick of the candle. Okay, so initial 13.9 pips down, and then the figure in the black brackets here shows you the market move 10 minutes after the release has occurred, going to the end of the candle. And then here you have the market move 30 minutes after the release has occurred, again going to the end of the candle. So compared to the other rate decisions, it wasn't as strong as a movement that had occurred in the past. More or less because the markets had already priced in the rate to remain unchanged, and there wasn't anything really outstanding or new enough for the markets to see, or enough for the markets to take it as a surprise and then reprice their expectations for the Bank of Canada. So that's what we have to be kind of be aware of, is if you do have the same thing again where there isn't that much to go off on, the market reaction could be quite muted, and then that makes it, then of course it makes it it doesn't really make it that viable of a trade. Depends, for you to see how you see it. If you still want to trade it off of the move, if that works for you. But usually what you want to see is, first of all, with the interest rate decision, although the rate is expected to remain unchanged, in the best case scenario, you'd want to see a deviation. Okay, although of course that's very, very unlikely to happen. To see us for a surprise to happen, first, one of those places would be the interest rate decision itself. If it goes higher, or if they decide to cut rates this meeting, which would be very, very surprising. They do, even if they do hike rates, but the Bank of Canada has been known to surprise the markets when they feel like it. Then from the statement itself, if they consider that inflation is still sticky, and if they say in the statement that they may need to raise rates in the future, or if they do decide to raise rates at this meeting, then that would cause a bullish reaction, or could cause a bullish reaction for the Canadian dollar. On the flip side, a dovish monetary policy statement would be that inflation is headed towards a 2% goal, and that there have been talks of, or that the central bank is open to talking about interest rate cuts this year, or there have been members that have spoken about, or if there have been members that have spoken about interest rate cuts and giving their predictions, which is very unlikely in a monetary policy statement. You usually get that in the minutes when you have what happened during the discussion, what was said during that discussion, that then leads to markets and repricing their expectations for the central bank. If in the statement they said that they might be open to interest rate cuts, but if in the meeting minutes they then reveal that a majority of members were open to interest rate cuts, that's a big telltale sign that then the central bank is not only open to interest rate cuts, but that it could happen sooner rather than later. So in the statement, it's harder to kind of pinpoint what the central bank will do. But in this case, if inflation is stickier than what the central bank expected it to be, and that they may need to raise rates again in the future, which has kind of been repeated before, that they're still open to raising rates. But if they say that there is a need, that there may be a need, rather than being open to raising interest rates in the future, that could then provide a bullish reaction for the Canadian dollar. So these little nuances with the wording of what the central bank says is very important, regardless of whichever interest rates, whichever central bank you're trading, because it's quite difficult to make a distinction between what the previous statement said and what the current statement has said. So you've really got to try and do your homework as to figure out what's new with the central bank or what's old, and if there's any surprises the markets hadn't already priced in. Okay, so this, if you're looking at this here, this is the Google Sheet, which represents what we call the ranges, deviations and ranges Google Sheet. This represents how the markets react to each release, noting the strength in each of the different not only currencies but also stock indexes, bonds as well. And then we have covered some earnings. Well, these earnings we have done quite a while ago. Looking to get back into doing those, but just need to continue working on that. But this is what the Google deviations and ranges sheet does. It shows you how strong was the market reaction to an economic release. And for interest rates, we do a short summary of what was said that will then give you an explanation as to why the markets had reacted in that way. So this here, as said, we do the initial market reaction on, so this is all on a 1 minute candle, the initial market reaction, 10-minute market reaction, 30-minute market reaction, and that's all that data is placed in one place, and you can compare to see how well a currency pair has done against another one, or an index has done against another index. That's all in one place. That is completely free. So what you can do is you can subscribe to the MACROACE mailing list, and what that does is it gives you access. So when I send out an email Monday, that will then give you access to this Google Sheets, a Google Deviations and Ranges sheet, which is completely free. Okay, so not only do we cover the Bank of Canada, but you can see here we've got CPI, which we've covered, non-farm payrolls. Some of the releases we might not cover in a live stream, but we'll still record the data and see how the market reaction has been. Some releases we won't cover at all because the market reaction isn't there, or it's not important enough. It's not what traders are focused on. So that's there all in one place. I provided the link for you there. If you sign up to that today, you get an email on Monday morning with the upcoming week ahead for what to expect in Europe, Asia, and the US session. Very short summary. It's supposed to act as a refresher and a little reminder of what to expect for the week ahead. It's not very extensive or in detail, but it's a little refresher. And in that same email, you get a button or a link which will then give you the ranges and deviations and also the links to the live streams for the week ahead as well. So that's the ranges and deviations sheet. So I'm going to bring up GPCAD on our chart here. Okay, so that's that there. Okay, bear with me 1 second, guys. I'll be back in a sec. Okay, and we're back. All right, so we've got about 3 or less than 3 minutes left till we get the rate decision from the Bank of Canada. So I said we've got what we're looking at is we've got EuroCAD in the bottom left, GPCAD top left, and Aussie dollar CAD in over here as well. All right. So let's keep an eye on everything here. Now remember, on FinancialJuice is where we're going to be looking at to get the data from. On top of that, we do have the S&P manufacturing, the S&P's manufacturing and services data, alongside the composite data with the rate decision as well. Of course, the Bank of Canada did change their timing to 9:45 instead. But as I said, on FinancialJuice, where you get your live voice and text service all in one place with your voice feed here, you can see where I've clicked the button. And then you have your text headlines all in our news feed here in the middle. And then on the left-hand side, you have your economic calendar of the releases to expect for not only the day ahead, but also the week ahead as well. So that's all in one place. So live, real-time data and news, keeping up to date with what's going on in the markets, what is the sentiment, and also what are the risks that are then there for the market. So if you want to get FinancialJuice, what we'll do, well, I'll have to do the ad, little ad afterwards. But we have a New Year 92 deal. So for the new year, there is a current deal where you can get FinancialJuice Pro for a 92% off of what it currently is. But we'll do the release first, and then we'll get to that. Actually, I'll quickly put that link in here so you guys can have a look at there. And that is the code. Okay, less than 10 seconds. Let's see what occurs. All right, I'm going to go silent for a little bit. Okay. All right, so let's have a little look through what we see from the Bank of Canada then, with what they've said. So they said inflation remains too high with persistent strength in shelter food price inflation. Bank is now starting to look at how long rates need to stay at current levels rather than whether policy rate is restrictive enough. They revise GDP growth down to 1% versus 1.2% in October. What else we got? So they expect inflation to remain close to 3% in the first half of 2024 and then returning to the 2% target in 2025. Okay, so a little whipsaw there on the, well, it didn't hold its position on the downside if we're looking at GP CAD. So the market reaction wasn't that clear or great or strong enough so far from what we can see for it to go in one direction. Okay, so it's about 30. What it is a bigger market reaction the last time around on GP CAD, what we'd seen. So about 30 and a half pips towards the downside on the initial market reaction. Let's see what else was said. Okay, so there isn't anything else. They have said they need to give higher rates time to do their work, but there isn't anything else that's been put up by the central bank that is a cause for surprise or anything that's a big surprise. So they need to let high rates do their work. Inflation remains too high with persistent strength in shelter and food price inflation. What else? Considerable economic uncertainty remains over risks to outlook appear balanced. They said that global growth has slowed, but not as much as we thought it would. That's a bit hawkish there. So still hawkish comments from the central bank, albeit the majority of the sentiment of the comments would be seen, and how the markets are reacting would be seen as expected to a degree. Nothing that's really come through that's surprising that's come from the Bank of Canada in their rate decision. So if we look at some of the other areas then too, if we look at the Aussie dollar to CAD, actually let's look at Euro CAD. Okay, so about mm, 19 or 20 pips towards the downside there. So again, there really wasn't that much or anything really super clear that the central bank is going to, if there is a need to, if there was a need to raise rates, but they've said that they need to let high rates do the work instead. Okay, so that concludes the live stream for today. No, I didn't catch the falling knife. No, no, I didn't trade that. It was too late to trade that. What else we got here? Oh no. Okay, well, I can't really say anything else about Eagle FX other than good luck for next time, though. Yeah. The market reaction was bigger than what it was before, though. But yeah. Now looking at it, it's pretty dull. Well, post the initial reaction, it's pretty dull. Will I cover the Bank of China? They've already done their rate decision, and that's in the Asia session, and I won't be awake. So I'm mainly covering the US releases at the moment, and the ECB rate decision, which is out tomorrow. And that, as said, so for the ECB interest rate decision, that's going to be what we're going to be doing for that. Don't forget, if you like the information, don't forget to like the video, share the video, subscribe to the channel if you found the information useful or you gain a better understanding of how the markets could react, or the better understanding of what the central bank meeting is all about and what could occur, and if that has helped you with your trading. If it hasn't, let me know. Give me feedback. Tell me what I need to do better. If there is something that I need to do to make the live streams better. Today is there's not much meat to chew on, so it's quite muted, really. But here's a link for tomorrow for the ECB interest rate decision that I'll be covering, and the rate itself is at quarter past the hour, quarter past 8:50. So 8:15 a.m. Eastern time. I'll be doing my live stream 30 minutes beforehand to go through the prep as well. So with the interest rate decision, it's much more difficult because you don't have one single figure to go off. You have the statement to go alongside it too, which then complicates how the markets might view what the central bank has done. So first, it's the rate itself, and then it's looking out for any hawkish or dovish comments that really stand out, and then it's looking at how the market reacts. So in this case, the markets didn't really take the statement as anything outlandish. Hence, I didn't put on a trade. So I just left it as it is. And anyway, it would have been too late to capture that initial market reaction, because with interest rates, kind of need to know what they've said. I mean, you can go ahead and go blind without looking at the statement if you want to, but that doesn't, I mean, it can work out, but you know, that's at your own risk. So look at the rate, look at the statement. Is there anything that stands out that surprised myself and the markets? How has the market reacted? In this case, a little quick pop from Canada, and then just going back to the way it was trading. Hopefully that makes sense. Baru says those news just crazy. Yeah, news trading. Although it is quite crazy, if you can master what type of news to look out for, and have a better understanding of what kind of comments to look out for from a central bank, then that can help you and aid you with your understanding of how the markets could react in the future. So, as I said, with Financial Juice, we have our with Financial Juice with the newsfeed here. This is all live and in real time. And then we have your voice feed, and we also have our text feed as well. So this is everything you need, all in one place with Financial Juice. So again, especially if you're a day trader, you want to keep an eye out on what's moving the markets or what has moved the markets, then Financial Juice is the place to look at. And as said, there is an offer for the new year with 92% off Pro. So New Year 92. So if you have a look at the link that I've put in the chat here, which I'll see if I can grab it again. I'll pin it. So if you're not a Pro member of if you're not a Pro member, or if you haven't signed up before, if you want to sign up, then what you can do is in the top left-hand corner here, where you can see where I'm clicking the little slider, the button or the logo next to that is where there'll be a button that says Go Pro. Then, so once you've set up your account with your login details and you've verified it via your email, and you want to go Pro, then once you click Go Pro, select the subscription that you want to use, and then once you've done that, then you can then you go back to the news feed, log out, then log back in, and then you'll have the Pro version of Financial Juice. So yeah, so that's something they can use there. All right, and TickStrike then. So TickStrike, if you've never come across what TickStrike is all about, what TickStrike does is it allows you to listen in and see how strong the buying or selling momentum is. Now, if you are day trading and you're looking to capture moves or manage your market risk, then having a TickStrike then aids you in that. Another way to look at TickStrike, so another way to describe it, is how strong is the buying or selling momentum that is there. Okay, and then for that, what you can do is have a look at using TickStrike here. So this is a ticker box. TickStrike will give you visual and audio alert to tell you how strong the buying or selling momentum is within that currency pair, within the stock, within that index, futures index, or any other futures that you're looking at in Bitcoin, in crypto, in ETFs and ETNs, and your internals as well, like your VIX or ADD. See how strong the momentum is. So this, what we're looking at here is the ticker box for looking at GPCAD, and here represents. So you can see here now When there's a bit of buying, when there's buying that goes on, you see a plus figure, and when there's selling, you see the minus figure there. So what does the number represent? So the number represents the sensitivity of the ticker. So 1 is the most sensitive to market reactions, i.e. when there's a lot of buying or selling that occurs, then TickStrike will give you a visual and audio alert. And you can chop and change whether you have a visual alert or an audio alert or both. Okay, you can also change the color if that helps too. But when I drag this dial up higher, all the way to 15, 15 is the least sensitive to market reactions. So only when there's a big amount of buying or selling at that time, and it triggers TickStrike to give an alert, only then would it give an alert to you visually or audibly to let you know that there is buying or selling momentum, or strong amount of buying or selling momentum. Okay, within that, from that ticker there. Now, if you scalp the markets and you're looking for something even more sensitive, then we have this button here, which is the lightning bolt button, which you hopefully should have seen me do there. That lightning bolt button, what it does is it makes TickStrike uber sensitive. So remember, 1 is the most sensitive to market reactions. This goes 15 levels below 1. So then you get uber sensitive market reactions. So you can see all the little bits of buying or selling that occurs. As you can kind of see, as you can see there on GPCAD. It's too crazy for me. But, you know, as said, if you're scalping the markets and you're looking for those little bits of profit taking here and there, then again, you can use that for yourself. You can turn that on, the lightning bolt mode, and of course you can do the same thing. You can chop and change the sensitivity of that. Remember, as long as the lightning bolt is there, you're always going to be going below 1, which is the most sensitive without the lightning bolt. Okay, so you can chop and change that to whatever suits you, and then from that, I said, you can, with TickStrike, I said you can manage your risk, capitalize on potential trades that might be occurring, that you might see, being not sure of how strong the buying or selling momentum is. Then again, as said, TickStrike is there to help you or give you an idea of that there. All right, so that's TickStrike. If you want to have a little play with that too, then we have our link here for TickStrike. Bing. There we go. So you can sign up to that and see if there's something for you. Now, if you don't want to pay for TickStrike straight away, but you want to have a little play around, then you can have a little look on the newsfeed, and this is on the free version as well. Mini or a constricted version of TickStrike, or more of a restricted version of TickStrike, where you look at the S&P 500, Euro dollar, oil, and Bitcoin, and the sensitivity, I believe it's set to 6 from my knowledge. But if you're not familiar with TickStrike and you're not sure about it, you can have a little play with it on the site there, see if it works for you, if it doesn't work for you, if it's something that you want to incorporate with your trading. And the same goes with FinancialJuice Pro. If it's something that you feel could work in your trading or might not work in your trading, then you'll know if you have a little play first on the newsfeed there. Okay, so that concludes the live stream for today. Thank you very much, ladies and gentlemen, for joining me. Have a wonderful rest of day, and I will see you tomorrow in the morning at 7:45 a.m. Eastern Time to go through the ECB interest rate decision.